Most people think that tax season is when the IRS is distracted. They think enforcement slows down. They think nothing serious happens until after April 15th. That assumption gets a lot of people hurt because tax season, you see, is when the IRS enforcement just starts moving. Not stopping, never slowing down. When I'm doing taxes, I hear this every year. Everyone is filing. The IRS must be overwhelmed. They don't have enough time for little old me. Now that logic seems reasonable, but it's also wrong because tax season isn't their quiet time. It's their data intake time. And data is what drives enforcement. So during tax season, the IRS receives W-2s, 1099s, K-1s, interest statements, brokerage statements, and employer filings for your wages all at once. So this information doesn't really wait for you to file. It already exists in their system. So the IRS runs data matching programs based on triggers, and they compare what was reported about you versus what you filed about yourself or didn't file. And that's when problems really surface because missing returns, income gaps, old balances tied to new income, all of these come to the surface. So tax season is when the IRS sees the full picture. If you haven't filed, the IRS already has some income data on you. They just don't have your side of the story yet, so they fill in the blanks. And when they do that, they get to assume the worst possible version of your financial self ever possible. They don't give you any deductions, they don't give you any credits, and by the way, they don't give any explanations either. And that's how enforcement just starts. So I hear people say, I didn't hear anything for years, and then suddenly I got all these letters. That timing is not random. It's in tax season that the IRS confirms who didn't file, who owes them and still earns money, and who ignored prior issues. And once that confirmation happens, file folders move forward on other people's desks, quietly at first, but then things move faster. And this is usually when people tell me, I thought ignoring it bought me more time. Instead, it's just delayed things until the IRS had better information. That's when it gets serious. Another dangerous belief to have, if I'm owed a refund, they're not going to bother me. Well, that's kind of true, but refunds really don't protect you because the IRS can run refund offsets, freeze refunds. They can use refunds to open up your files. In some cases, filing for a refund puts your account back on their radar, right where you don't want to be. Tax season connects old issues with new activity. So enforcement doesn't start with just making threats. It starts with them making internal notes, risk scoring your account, case movement, system flags. By the time you get a letter, the process has already begun. That's why letters you get later escalate more quickly. A lot of people say, I'll deal with this after tax season. Here's what happens instead. New balances get added. Old years resurface. Payment plans quietly default. Deadlines stack up against you. And now they're reacting under pressure. The best time to act is before enforcement resumes. Beat the IRS at their own game. Before their assumptions harden, before their notices escalate, before leverage shifts. That window exists. But it's earlier than most people realize. Early action allows you more options, lowers your pressure, and gives you better positioning with the IRS. Late action means corrections. You're doing damage control at best, and you have fewer choices. So same facts, very different outcomes. So tax season is not a pause button, but it's when the IRS gets clarity. And clarity leads to action. Understanding that timing is how people stop reacting and start taking control of the situation.